United Nations hosting a conference on sustainable stock exchanges. The lead sponsor of the event is Aviva Investors. It's the global asset management business operated by an affiliate of Aviva PLC of the UK. Joining me now is the CEO of Aviva Investors London. That's Paul Abberley. Paul, thanks so much for taking a break from the conference to come in and speak to us. So talk to us, first of all, what is sustainable stock exchange? What does that mean exactly?
Well, we're really focusing on sustainability long term in terms of corporates and their strategies, ensuring that the way that they're running their companies take into account the responsible behaviour that society expects from them, and to ensure that what they're doing is sustainable. The stock exchange dimension is about thinking, how can stock exchanges take part in an exercise to try to improve that performance?
So if you can get specific with us here, what kind of reporting are you looking for from these companies? What specifically do you want to know if they are indeed sustainable?
Well, specifically, and Aviva Investors is making a very clear recommendation here that this should be a condition of listing on a stock exchange, that the company produces a report annually explaining its long-term commercial strategy and putting that into context in terms of, is it sustainable both in terms of the business itself, is it sustainable in terms of the impact it has on the environment and on society, and is it being executed in a way which is responsible? Either that, or that the company explains why it doesn't think that's important.
Paul, in other words, it's all about transparency, and the impetus for this being the global economic downturn.
Absolutely. We're really convinced that if we have greater transparency, then investors and companies will take a longer-term time horizons, and a longer-term outlook we think would have avoided some of the problems we've seen in the last 18 months.
Might I ask you then, because then the question comes up, if it seems that this is something that is going to benefit both companies and investors, where was the transparency in the past? Where was the sunlight?
Well, I think that there wasn't the sunlight in the past, and I think over the previous 10 years, everyone had got much more short-term in terms of looking at quarterly earnings, companies talking about their quarterly outlook, investors wanting to know where they're going to hit their quarterly results. How did we get there? It's a very complex topic, but I think everyone agrees we now need to move back towards a long-term time horizon.
I'm also curious, there is some sort of niche investing in this area when you talk about social responsibility. There are certainly social responsible funds. Do you think there's enough appetite beyond that for people to actually find out this sort of information?
Yes, I certainly think there is, because from our viewpoint as investors, while we have those niche funds, we also use this type of analysis in our mainstream investing. We think that by taking these factors into account, you can make better judgments about how stocks are likely to perform in the future. So for us, this is not a niche, this is mainstream, good quality work to forecast stock returns.
Are there any corporations who are already doing a good job at this?
Yes, there are a minority of companies that are providing this information. We need many more to do so.
Can you give us some examples, perhaps?
Well, very close to home, my own company, Aviva, does a lot in that area. And in fact, we are going to be one of the early companies to actually do what I'm suggesting today, which is to put our particular report to a vote at the AGM.
Paul, might I ask in about 30 seconds, the collaboration with the United Nations, how did that come about, and were there a lot of international hurdles that you had to go through?
No, this was a coalition of the willing, I think. Groups like the Global Compact, UNCTAD, and the Principles for Responsible Investing group, a number of organisations which stay in close touch with each other, and under the auspices of the UN, have seen an opportunity to get together and try and push this forward.
So there wasn't any kicking and screaming. People said, you know what, it's time. We need to do this.
Absolutely. This is the time to really begin to push this.
But what about the stock exchanges themselves? I mean, the coalition of the willing, fine, but how realistic is it that this will actually be enacted?
I think it is realistic. The stock exchanges will want to see there's a value proposition for them. If they view it as something which adds to their costs or makes it difficult for their clients, the corporations, then they'll hesitate. If they see a value proposition, other investors such as ourselves taking an interest, then I think they will quickly support it.
Okay.
Paul Abberley, CEO of Aviva Investors London, joining us on set. Paul, thanks so much.
Thank you.